Thinking about buying a condo here in Sarasota, Florida? Maybe you sold your house up north and you're ready for that carefree lifestyle. No more shoveling snow, just sunshine, the beach, and relaxing sunsets. But then you start hearing about, whoa, high condo fees, strict lenders, special assessments, and even loan denials. Yikes! Stick with me. I'll break it all down so you'll know exactly what to expect and how to avoid problems. Here's the first truth. When you buy a condo, you're not just buying four walls. You're also buying into a community. The community's financial health, its reserves, its board of directors, and yes, even its reputation. That means lenders don't just look at you. They're also looking at the community. They want to know, is it well managed? Does it have adequate reserves set aside for future repairs? Are there any lawsuits against it? All of these things matter to a lender just as much as your credit score and your down payment. Here are some of the exact questions banks and mortgage companies will ask on a condo loan application. What is the percentage of unit owners in the community? If too many of them are rentals, that's a big red flag. Are there any special assessments coming? If the answer is yes, lenders are going to back off. They're going to worry that some owners aren't going to be able to pay and they're going to become delinquent. Does the association have adequate reserves? Reserves are savings for things like roof replacement, exterior paint, big ticket items. They'll ask, are the buildings in good physical condition? Especially in light of Florida's new inspection and reserve laws that came about after the building collapse in Surfside, Florida that happened a few years ago. What are the big differences between financing a condo and a single-family home? Start with insurance. Condo insurance is very complicated. And if the association doesn't carry the adequate coverage, the lender will not lend on that. There are also loan program restrictions. For instance, not all condominiums are approved for FHA financing or VA finance or some conventional loans. And there's a limited lender list. Not all lenders will finance condos. With houses, easy to shop from lender to lender. But with condos, the list is a lot smaller. And interest rates for condominium loans are typically higher than for single-family homes. Another key difference is how lenders look at your budget. It's not just the mortgage payment plus the taxes plus the insurance that they use to qualify. They also add in the monthly condo fees. And adding those fees in can make or break your loan approval. For example, if your condominium fees are $800 a month, that could reduce the loan amount that you qualify for by tens of thousands of dollars. And lenders also worry about special assessments. Say a $15,000 assessment gets dropped on you after closing, the lender is concerned about that. That may affect your ability to repay the loan. So what can you do to be sure both you and the condominium you want to buy will qualify for a loan? Here's my checklist. Work with a lender who understands condos. Not all of them do. Next, get the condominium documents as early as possible, even before you make your offer. Check out the financials, the reserves, the budget, the board meeting minutes. In fact, you should download my free guide called Condo Documents Checklist. It's free. The link is below in the description. And that way you'll be sure that you have all of the documents that you need to see. Then you'll want to ask about insurance. Ask about the association's coverage as well as your unit coverage. Those are not the same policy. Look at the occupancy rates. The more owner-occupied, the easier time you're going to have financing. And last, and probably the most important, lean on a realtor who speaks both real estate and financing. That's where my unique background helps, because I am not only a licensed realtor, but also a licensed mortgage loan originator. Buying a condo can feel like a maze, but if you know the rules of financing, it's actually very doable. So if you're asking, why does financing a condo feel so much harder than financing a single-family home? Now you know. Because the lender is underwriting not just you, but also the condo community. Want to go deeper? Watch my video called Condo Reserve Requirements for more detail about what expenses associations should be saving for.